what exactly is a real estate investment trust? And is it sort of safe to say that it's like a mutual fund for real estate?
But this is investing directly in the end property.
And not in the company
Not in the company.
which is in the business of real estate.
Correct.
Let's say if I want to invest in a REIT tomorrow, how do I do that?
You can also indirectly invest in them, which is what I do. There are some mutual funds which in turn hold REITs. So if you're from Delhi, Vivek, Select City Walk in Saket is part of the Nexus portfolio.
That's a pretty big mall and a pretty posh mall,
Yeah.
which people like going to. Hello and welcome to Moneynomics with Mint. I'm Vivek Kaul and I have with me Neil Borate. So we are supposed to talk about real estate investment trusts today. I might sound very stupid here, but what exactly is a real estate investment trust? And is it sort of safe to say that it's like a mutual fund for real estate?
Yes. So a real estate investment trust or a REIT is a pooled vehicle to invest in real estate, commercial real estate specifically for the mainstream REITs. It is akin to a mutual fund because it is a pool vehicle, but different in the sense that there are real estate mutual funds which or mutual funds which invest in real estate stocks, which are another way of investing in real estate. But this is investing directly in the end property.
And not in the company
Not in the company.
which is in the business of real estate.
Correct.
So what kind of real estate do these REITs invest in? I mean, globally and as well as in India? Because there are different kinds of real estate.
So globally, the rules are actually a lot more liberal. There are residential REITs, there are even land REITs.
Okay.
India so far has only allowed REITs in commercial property, at least in the mainstream. There's a separate category called SM REITs, which we can talk about later. But it's only commercial for now.
So by commercial, you basically mean buildings in which offices are given out for rent, right?
Yes.
Primarily, I think that would it include something like a shopping mall?
Yes. So out of the 4 listed REITs that India has, 3 invest in office spaces and 1 in a mall.
So the mall one is different from the one
Correct.
in investing
Correct.
in office spaces. Very interesting. So how do I invest in any of these? Let's say if I want to invest in a REIT tomorrow, how do I do that? Where do I go for that?
Yeah. So through a stock exchange, you buy units or sell units, same as you would with an ETF or a stock. You can also indirectly invest in them, which is what I do. There are some mutual funds which in turn hold REITs, and that's how you can do it as well.
So, when you say I can buy a REIT from a stock exchange, so essentially I have to log into my Demat account and then search for that particular REIT. And so there must be a market price of that REIT at that point of time?
Correct.
At any point of time?
That's right. It's a lot like an ETF, where an ETF will have an NAV and a market price. A REIT will have an NAV and a market price. In fact, most REITs trade at a discount to their NAV. So you're actually getting it slightly cheaper than what it's worth on paper.
Okay. So then how does that help me as an investor?
If that discount does get closed at some point, then you get a little bit of a bump. It's not huge, but 2-3% return you would get.
But ultimately, I have to sell my units in the market only, right? It's not like...
That's right. So if the discount persists when you sell, you will get no benefit.
Right. So Neil, what is the minimum investment required in a REIT? How low can I start?
Yes. So SEBI has progressively reduced the minimum amount that you have to invest. So currently it stands at 10 to 15,000.
Oh, that's all that I need
all.
to invest in a REIT.
Yes.
So when I log into my Demat account and want to buy a REIT, someone must be willing to sell at that point of time.
That's right.
How good is that liquidity? Is our REIT units available at all points of time, or does one have to wait?
No, it is a challenge, and that puts off a lot of people from REITs, which is why I personally favor the indirect way of holding REITs, which is through a mutual fund.
Okay, so mutual funds, what kind of mutual funds invest in REITs?
Mutual funds can invest up to 10% of their units in REITs. So hybrid funds, for example, each fund has to amend its SID to allow this.
What is an SID?
The scheme information document, but up to 10% is allowed.
Okay, so any hybrid mutual fund. An equity mutual fund cannot do it, right?
Some equity mutual funds have amended their SIDs to allow it. So yes.
Okay, so SEBI does allow equity mutual funds to invest
Yeah.
in REITs. Okay, that's interesting. Now, I was reading a story written by two of your colleagues at Mint, Madhurima Nandi and Abhishek Mukherjee, and they write uh, about the fact that there are 3 listed office REITs in India, right? And I'll tell you the names. One's called Embassy, the other one's called Mindspace Business Parks, and the third one's called Brookfield. So, what are these office REITs? So, if I invest in an office REIT, what exactly am I investing in?
So you're investing in offices across India, and what you're getting is the rent from those offices.
Okay.
You're also getting the price appreciation of those offices, but experience has shown that that isn't much. So typically, the what is called a distribution yield from REITs is in the 5 to 6% range, and the price appreciation historically has been 2 to 3%. The return that people have gotten is in the 7 to 9% range,
Okay.
which compared to our booming equity market is not super exciting.
Which is true. And also, if we compare it to a fixed deposit, also, it's not really, so if I'm like looking to invest in a particular asset to be able to diversify better, it might sort of make sense. But if I'm just looking at it from the pure return point of view, then it's probably not the best thing going around.
Yes, you can say that because the risk also is not low enough to justify it. So, if you think of debt funds, for example, which also give 7-8% in some cases, the volatility in them is very low. Only if some massive interest rate event happens or there's a credit default, you will see a big jump. But in REITs, the volatility is almost as strong as equity, a little bit less than equity, and yet the returns are kind of like debt. So that makes it a not very attractive product.
So basically, return on REITs, once we have taken the risk into account, the risk of investing in a
Yeah.
REIT isn't really great.
Is not great.
Okay. So also, your colleagues mentioned the fact that there is one listed retail REIT. So how is this retail REIT different from the office REIT?
Yes. So as we discussed before, so this is called Nexus Select Trust.
Right.
It invests in malls, and
Oh, hold on. So when you say it invests in malls, they actually buy these malls?
yes.
Okay.
Yes.
Okay.
And in fact, this goes to the heart of why some of these REITs are not delivering spectacular returns to investors. So Nexus is a bit of an exception. It has actually rallied massively in the past year. But overall, as a category, they haven't done that well. And the reason is that they end up buying inventory from builders. And that is typically priced to perfection. So the cream out of it is been taken away, and what you get is a sort of humdrum.
So basically, you make money from the rent
Yes.
and not from the capital appreciation. Right. Again, you were talking about Nexus. So why has Nexus rallied so much? So when you say rally, is the NAV also going up, or is it just the market price which is going up?
It is
or the
the-
market price is going up faster than the NAV?
It is the market price that has gone up massively. The NAV changes only when they do a revaluation of the property.
Oh, okay. So see, again, stupid me. I was assuming NAV changes on a regular basis. So that's like, mutual fund has to declare an NAV at the end of every day. So which obviously and cannot be the case here, because real estate, there is nothing like a daily real estate
Yeah,
price, at least
yeah.
not in India.
Correct.
Okay. So basically, whenever they do some auditing and figure out that the assets that they own are now probably worth more or worth less, then the NAV changes, right?
Yes. So you could argue that when the market price rallies, maybe the market has anticipated that appreciation in the book value that they will do.
Okay, so basically the market feels that the last time that they carried out the audit exercise, and when they do it again, so the value of the assets they hold
Will
is going
rise.
to-
Yeah.
And these assets are shopping malls in
Yes.
this case. So any mall that I would know of, Neil?
So if you're from Delhi, Vivek, Select City Walk in Saket is part of the Nexus portfolio.
That's a pretty big mall and a pretty posh mall,
Yeah.
which people like going to. So tell me, another thing. Why is there only one listed retail REIT in India? And why are there only three listed office REITs? I mean, this doesn't really sound quite right. And I say this because, I have been hearing of REITs since, not since 2005 when I joined journalism, but at least since 2007, 2008. So it's close to 17, 18 years. And we still have just four listed REITs in India.
Correct.
So why is that the case?
Correct. And in fact, the SEBI regulations for REITs were enacted in 2014. So they've
So that's
crossed.
also 10 years
Yeah,
now,
they've
right?
crossed a decade, and we just have 4 REITs to show for it. One reason could be the size. So REITs have to be above 500 crores. There may not be that many builders who have that kind of size and scale. The other is probably that investors have not been enthused. And if you're not confident of getting investors, why would you go ahead and form the REIT?
So, can I offer you a conspiracy theory here?
Yes.
So, my conspiracy theory is that given that India has so much black money in real estate, the moment you become a part of a structure like REITs, then you have to be, then you have to be transparent, right?
Yeah.
So, could that be a possible reason? I mean,
Yeah.
one can speculate. For lack of better information, we briefly spoke about the kind of returns. REITs
Sorry,
have.
Vivek, and the third reason could be that SEBI rules only allow commercial property to be in REITs and completed projects to be in REITs. Now, the excitement of real estate investing typically tends to be in under construction property, or it tends to be in owning land, buying land, and watching it appreciate. Both of those are extremely high risk. People have lost tons of money on them, but
and
made tons of money on them. But they're absent from REITs, so that could be another.
which is where the black money is also. So
Yes, that's right.
So again, a sort of counter to this. So wouldn't like allowing REITs in these areas sort of help clean up these areas as well? I mean,
Yes, and in fact, SEBI has taken a step in that direction. So when they formed the rules for SM REITs, small and medium REITs, they took away the commercial property stipulation. So they can have a residential small and medium REIT. You can have some kind of warehouse or intermediate property. You're right. If they allow land as well, then possibly it could lead to a.
I mean, there could possibly be a little more scrutiny, but but then again, the fact that there are just four listed REITs, that in itself tells you that allowing doesn't necessarily lead to more people entering the market, right? Okay, so we briefly spoke about the kind of returns that these REITs have generated. So can you get into a little more detail? Also, if you possibly can give us a little idea about what kind of returns are available internationally.
So the returns, as we discussed, Vivek, are composed of two parts. One is the distribution yield, which is essentially the rent that is paid to you. And the other is the price appreciation. That gets reflected in the NAV. Now, the distribution yield itself is composed of multiple components. Because this is a sort of multi-layer corporate structure. The REIT invests in what are called special purpose vehicles. They, in turn, own property. So, ultimately, what you get from the REIT is, to a large extent, dividends. And dividends are tax-free in the hands of investors, provided that the REIT has not opted for the concessional tax rate. You also get interest from the loans advanced to SPVs. So that is paid as interest, fully taxable in your hands. And you get something incredibly complicated called return of capital, which is repayment of loans advanced to the SPVs. This, the budget has messed up quite a bit, because the finance minister probably felt that the return of capital was a bit of a loophole. Initially, there was no tax on it. Then it went ahead and made it fully taxable. The industry argued that why are you taxing something that's just a return of capital? It's just your own money coming back. And then they created a further complication by saying that return of capital is taxable if the return of capital exceeds the face value of the REIT. Now, as an investor, you don't keep track of how much capital has been.
It's just I am lost, honestly.
So to cut the long story short, the taxation of REIT distribution is complicated, And
can you sort of give me a back of the envelope? Let's say I invest in a REIT, okay, and that REIT gives me a return of 8%, okay. So how much is the after-tax return? Is there a ballpark figure that you can give me?
so let's say that of that 8%, 6% is a dividend. That's tax free, straight away 6%. Let's say the remaining 2% is interest payment. Now that, let's say you're a 30% slab taxpayer.
Which I would be. I mean,
Which, yes, yeah.
Otherwise there's no point in doing all this. I might just keep my money in the bank and...
Yeah. So that comes to 0.6. So you're paying 0.6.
Basically 7.5. No. 7.4. 7.4.
Yes. So roughly on the entire distribution, you're paying a 10% tax because it's only part of it that's being taxed. And the NAV appreciation you only taxed when you sell it. So that becomes capital gains. And capital gains after this present budget that happened in July, after 1 year, you are taxed at 12.5%.
So this is after 2 years?
No, for REITs.
So this is REITs are treated as equity and not as real estate.
Correct.
My God. So this is like quite a, it's quite confusing.
Yes, it is. Which again brings me back to my favorite point that you should hold REITs through a mutual fund because you don't have to worry about any distributions. They just accrue to the NAV of the mutual fund and you're only...
So if I buy REITs directly, then as a taxpayer, I have to keep all these...
Correct, which is a pain.
No, and this is the first time I'm sort of, I have come across something where the taxation for a single asset class happens in multiple ways.
Oh yes.
But why would they sort of complicate it so much? I mean,
I think our bureaucracy thrives on complication.
But how big, how many, investors are actually invested in REITs in India? Would you have any idea of that?
Yes, there was a release from the REITs Association. It is quite a minuscule amount. I don't remember exactly, but it's a few lakh.
Okay, so then there is no, so there's no real retail interest
in
REITs as such. So, finally to sort of summarize it, given that, our listeners and our viewers are probably all retail investors. So is it really worth the trouble for them? Even indirect holding for such?
I think no. I think indirect holding makes sense because it adds to diversification. So, for example, I invest through a hybrid fund, and a hybrid fund invests in debt and equity. Now, real estate is a third asset. It lends a kind of stability. And if you think of it, if you expect a debt-like return, 7 to 9%, that is roughly what you're getting anyway. So I think it's okay to hold it through a mutual fund and you have a fund manager do all the research and pick the right REIT. So there's one final point that I want to make and that is on SM REITs, which I'm quite bullish on. Okay. So small and medium REITs, SEBI has allowed two different things to happen here. One is that you can also have residential SM REITs. The second is that there is a strict set of rules on related parties. So in mainstream REITs, you can have builders forming REITs and offloading their own inventory, which is why...
To the REIT.
Which is why not much is left on the table for the end investor. Here, SEBI has said clearly that you can't have that model. The person who runs that SM REIT cannot be connected to the builder whose property is put into that SM REIT. So I think there's a chance for alpha. The third thing is that because of the size, which is 50 to 500 crores, you can have specific bets on specific properties, like the building we're currently sitting in. And if you've done your homework and this can appreciate, you might get returns that are far more than 7 to 9%.
Okay. So basically what you're saying is that in case of SM REITs, an institution has to come in and has to buy off that building from the builder.
Yes.
And then make a REIT out of it, right?
Correct.
That's how it would
Correct.
Work.
So there are existing fractional real estate platforms, which are those players that you're thinking of. Because they are structured as sort of more asset managers than builders, I see hope.
So basically they can get into this market and
yes.
A market can be made.
Yes.
Okay. So that I think was a very interesting discussion that we had on what before we started this discussion sounded like a pretty convoluted topic, and some of it is actually very convoluted. So we can only hope that it becomes simpler for all of us to invest in REITs in the days to come. Thank you.